Hi everyone, today I just wanted to talk about the stock market and the fear that's out there and the amazing buying opportunities that are out there at the moment. Just wanted to sit down and talk about it, just talk about some of the stocks that are on sale and just, sum up the fear that's out there. There's a lot of fear out there. There's the fear of that so many people have left the stock market. So many retail investors have left, so many people have quit the stock market, people are giving up, people are selling stocks now that are already down 50% and going, you know what, I'm just going to sell it now, I'm just going to quit. There's so much fear in the stock market right now. The stock market's having its worst year, or the S&P is having its worst year since 1939. I mean, this is history we're living through, and I can't believe that we're on these sort of levels, these sort of levels that, we're going through this period of time right now. When you look, it's crazy because you look around and think, there's a few issues in the economy right now and in the world, and you're looking at what is happening to the stock market and it's in self-destruction mode. And you're looking around going, yeah, it's not great, but is this justified? Like the amount of companies that I'm seeing now that should be, $10 stocks that are selling at $5, and some of them that should be $10 that are selling at like $3 or $2. Like this is a stock market picker's dream. Like the amount of stocks, you want to be really, the best investors start looking up in opportunities of fear. And when they see that fear, is they capitalize on them opportunities. And when people are panicking and leaving and selling assets that should be worth $10 at $5, you start picking up them shares up. And right now I'm seeing so much of that. I just wish I had more money. I wish I had more money to buy a lot of these dips, because if I could, I'd be buying so much and buying a lot of more stocks as well. And that's what's happening out now. If we look at a fear and greed index at the moment, I mean, look at this. It's down at a 6. This is nearly the lowest it could go. That's how much fear there's out there in the stock market. The prices that what is priced into a lot of stocks at the moment is just unbelievable amounts of negativity. You look at the Nasdaq. The Nasdaq is getting slaughtered since November. It's down 28%. So if you're looking down at your portfolio right now being down 28% or even more than 28%, this is why. The whole market is taking an absolute nosedive. I mean, if we look at the pandemic, peak pandemic, that was on the last final day where it was, max amount of fear closed in, the economy is shutting down, people are going to be locked inside their houses for months. 27% on the Nasdaq. You look at the Nasdaq now and it's down, more than what it was in that point of time. You go outside in the world right now and there's, like I said, there's a few issues, don't get me wrong, but you're looking at what's priced into a lot of stocks now. You look at the fear that's out there, you're thinking, you're getting priced in here that these issues aren't going to resolve anytime soon, or some of these companies are never going to get back to what they were doing, and there's some fantastic opportunities out there. And I thought, you know what, I'll just talk about 10 stocks. I think there's 10 stocks, maybe there's 11 stocks that I think are just, looking good opportunities. And I tried to mention as well a few that I don't own as well. And today in particular, I thought this one deserved a shout out. Tesla, $727. Now, without doubt, Tesla got a little bit overextended. It went on a bit of a crazy run, without doubt. When it was at, $1,000+, that's why when I saw that, I was like, okay, this is a bit bonkers. And now, you look at that point when it went up to $1,200 and it's lost half its share price. And it's lost half its share price, and you go, but the company hasn't fallen off half the percent. It's not doing 50% less revenue, 50% less profit. Since that period of time, over half a year ago, the story just keeps getting better and better with Tesla and ramping up the profitability, ramping up the revenue. And you look now at 98 times earnings, which when you look at the growth they're putting in and how EV vehicles aren't even in the prime yet. They don't even make up half of the sales of cars at the moment. And you're looking at that one going, it's not a bad opportunity. And I thought, I've been a Tesla shareholder before. It's made me good money twice over. And now I'm looking at that one going, this is probably another good opportunity in that one. And one that definitely I think is very interesting now. Tesla down at 98 times earnings for what that company is going to do in the next 10 years. And it's not even in its prime. You got to remember that it's an EV company. What are EVs doing at the moment? They're not even making up the majority of sales at the moment. So, yeah. Fiverr. I love Fiverr. I think, freelance work is just going to keep improving. More people are going to go to freelance where they can choose what work they do, what they work, what times they work, what day they work, what work they take on, and businesses as well. Rather than having that full-time employee that we take on for a 5-day contract, we actually only need him for 3 days. Let's go to Fiverr. I think the freelance economy is something that works, and we'll carry on working for the people who do want to do the work and the companies that want to employ the freelancers as well. And this has only been helped with the CV situation. I'm looking at something like Fiverr now, and it's done it. It's done it. It's gone back to pre-CV prices. It's scary. It's scary that it's actually gone back to pre-CV prices. The progress this company's made and the benefit it's gained in that period of time, and it's now back at them prices. It's scary. Like, I had Fiverr written down at $30 is a buy, and I'm looking at it going now. There's just so much to buy that I don't know if I can buy it. But I was like, this is where I'd buy, and it's hit it. And I think once again, this is unbelievable to see a stock that has had so much benefit in the last 2 years, and it's just gone. It's just gone from the company. I mean, something like an Apple. Apple was untouchable. Apple was one of the stocks that would not dip. It was holding up the stock market. It was pulling out amazing earnings after amazing earnings, and now we've seen Apple having crashing down 21%, down at 23 times earnings, which is so much better for Apple. I think if you start talking about Apple in that kind of teen PE ratio, I think that's unbelievably good. Even Apple's doing it. The one of the stocks that was holding up the stock market, and even that's down at the moment. And that's probably why we're seeing so many more of the indexes falling so hard, is because the stocks that were holding it up, the stock market's been in a downtrend for the last 12 months, but it's not been noticed in the index because a certain few stocks have been holding it up. They've joined in now, and look at the difference that's creating. It's just that everything else is still going down with it. So, I mean, even Apple's one interesting one to watch. Microsoft. Microsoft is a stock that never has any major dips, and even Microsoft is, even in the CV dip, you can only just see that little blip in the stock chart, 25%. And now you look at here at Microsoft, and even that's down 26%. It's the same as what it was in the CV times. So, I mean, I'm a big Microsoft fan. I've been a shareholder in Microsoft for the last 5 years. I love picking up shares when I can in it. Very rare when I do. I think I've only ever bought shares 3 or 4 times over the course of the 5-year period. And you talk about Microsoft. I mean, if Microsoft starts getting back down to 18 times earnings, that comes incredible opportunity, I think. Nvidia is having an absolute hammering. Same again, this is down 51%. One of the stocks that was holding up and down at 41 times earnings. One that I'm interested in, not as much because I still think this one is still a bit of a rich valuation, but once again, a stock that was holding up that's falling off a cliff. Netflix, I mean, this is just the pinnacle of what's going on. I mean, just look at that. Look at that stock chart. It's scary. It's scary to see a stock chart like that. I mean, just look at that. You'd think, looking at that stock chart right there, you'd think this company's dead. You'd think that's it now. Netflix is done. It's on the verge of bankruptcy. It's got major problems. I mean, it's just unbelievable. I mean, we're not even talking about a company now that's CV prices. We're not even talking about that sort of situation. We're talking about a company that was last at these sort of share prices in 2017. We're talking about 5 years of share price wiped out. And I'm not Netflix's biggest fan. I've been very public on the channel for the last 5 years saying I'm not Netflix's biggest fan. But you got to look at a company in Netflix now, trading down at 15 times earnings, the same share price it was 5 years ago, and think, it's still got a good brand here. It's still got a brand, it's still got a service that a lot of people are still going to use. And maybe it's had a bit of a reality check, and maybe it's had that valuation check. But to go to this extent, it's crazy. It's crazy. I said the same again. Netflix, if it gets down to that kind of low $100 range, I'll be buying, and it's on there. And I'm looking at it now, going, well, do I buy it? Because I said I'd buy it at these sort of levels, and it's got here now, and it's like there's just so much that's down here. It's a stock picker's dream right now. You've got so many things to pick from. Starbucks, same again. Starbucks is nearly at the prices where it was at in the CV times. The CV times when it wasn't even serving coffee. It stopped operating as a business. It's the same share prices then. It's just crazy. 18 times earnings, 2% dividend yield. Starbucks, the brand, same again. It's just, unbelievable brand. And look at the dip that these guys have been on. When you're talking about a 79 billion company with a major brand that has major amounts of profit and it's losing half its value, it's scary out there. And DraftKings, a couple of my stocks, it's been slaughtered. 2 years of progress just wiped off the company. It's down at $10. 2 years of progress. At the time this company was supposed to do 600 billion in revenue, and now this year it's probably going to do around about 2.1 billion, and it's grown phenomenal. The path to profitability was a little bit further away, and now it looks like we could be talking about profit in the next 2 years, and it's just dead. It's just dead. It's not wanted. Hims, a company that's just brought out a unbelievable Q4, followed up with an unbelievable Q1. Two good 11 out of 10 quarters from Hims and Hers. What's it rewarded with? It's nearly sitting at 52 close. Just look at the downtrend. It's unbelievable. Gang, same again. Gang is now valued way below what it came on the stock market 2 years ago, way below what it paid for an acquisition that it still owns. So it still has the old part of the business and the new part of the business, and it's an acquisition that it's made, and it's valued less than the acquisition that it made, ignoring the other part of the company completely. It's scary. There's just so many stocks down. There's just so many stocks down, huge amounts down, and there's just so much fear priced in at the moment. There's just so many stocks that's been hit hard, and it's one of those that if you are an individual stock picker right now, if you are generally focused on the long term, what I said back at the start of the video, if you like buying stocks that should be worth $10 at $5 and even $4, $3 now, you're getting them. This is it. If you bought in the fear of the CV dip, which I was even a little bit more nervous buying in the CV dip, because I was like, I don't know what's going to happen here. This is unprecedented. I've never, no one really has been through a mass pandemic and come out the other side and kind of seen what's happened in recent times. Is this going to be a serious virus? Are so many people going to die? Is the economy, how long is that going to be shut down for? When are people going to get allowed to leave the house? When will there be a vaccine? Could there be a vaccine? And buying in that dip, that was tough. It was very hard to be buying in the dip there, but you had the confidence that it would rebound. And now you're seeing stocks that are priced at what it was in the CV times, and in some cases even lower in the CV times, and on metric point of views even lower than CV times. And you look at a lot of these businesses all they've done is kind of downgraded the guidance slightly, or some of them haven't even downgraded their guidance. Some of them, like Hims and Hers, are outperforming what's expected, and it's valued at unbelievable levels. And this is where we're at. There's a lot of fear out there, more fear than the CV dip, which was more worrying. And you look at some of these now and you think, without doubt, a lot of these stocks are great companies, and in the next few years will continue to do absolutely unbelievable. And you look at the drops they have at the moment, and there's some fantastic buying opportunities out there. There's so many that I could have put another 10 stocks on this video. There's unlimited amount of opportunities out there right now, and last time I saw this fear, last time I saw this aggression in the drop in the share prices, I did the same thing. I bought the dip, and I have even more conviction in this dip. I don't think this dip is anywhere more justified than what we had back in, May, March 2020. I'm looking at this dip going, in the next 5 years, if these businesses keep performing how they've done previously, or grow at a certain decent rate, they're going to be fantastic opportunities, and there's going to be mass rewards from buying in these dips right now. Forget the fear, forget the negativity that's out there, forget what the people that are emotional investors and emotional investors that are following the market and saying, oh yeah, of course they deserve to be down, of course they're terrible stocks. Ignore them people. Look at businesses, and look at the businesses that are just keep improving. And when the stock market rotates out of this cycle, some of these are going to be good opportunities that you bought the dip on, and they'll be good returns, 100%. And there's a lot out there. There's a lot I want to buy. There's 5 on that list that I would love to own and I don't own at the moment. And I'd say keep your head down, look at the long term, Look at the companies, not the share price, and ignore a lot of the noise that's out there at the moment, because the noise at the moment has been unbelievable. 12 months ago we had unbelievable valuations on the upside. Now we're in a market where we have unbelievable valuations in the low side, and sooner or later that will rotate, and it will rotate the other way 100%, and it will flip again. We don't know when, but it will. And right now we're presented with, the longer it's down here, the better, because I can buy more shares at these prices when I can, and I will capitalise on the opportunities right now, and that's my plan. So yeah, just wanted to do a bit of a talk about the market, talk about some stocks and sales. So hope you enjoyed it anyway. A bit of a rambling on video really. Just wanted to sit down and have a talk really. So I hope you enjoyed it, and I'll catch you in a bit.